how is the Euro USD likely to react to this key area as we approach Thursday's ECB rate decision and statement? I'm going to have all the details in today's video, and we're also going to talk about the DXY because I think that where the Euro USD is trading right now could give us some big hints as to where the DXY is headed over the coming days and weeks. Now, if you do want my help with your trading, click on the link at the top of this video, and that's going to give you 90% off lifetime access to both the trading group and also the course that I just launched. So in the trading group, you're going to get daily videos, exclusive setups from me. You're also going to be able to ask questions in Discord and get real-time answers, and you'll also see my trades in real time. And the course teaches fake outs on the higher time frames. So this is stuff that we trade all the time in Discord. We talk about these markets, forex, stocks, commodities, and crypto. And we trade things like this right back here. So this up here was a fake out from the euro. This is one that we caught. This right here, same thing, right? Both of these are fake outs. So you essentially trade away from these moves. And again, this is what the course teaches. All right, so let's go and get right into the Euro USD chart here as we approach Thursday's ECB. So obviously that's going to be a big event for the Euro USD and really the DXY as well. So I think that first and foremost, trading ahead of the ECB is ill-advised just because we are likely to see a lot of volatility both during and also following that event. Now with the Euro USD, we've talked about these trend lines here quite a bit over the past few weeks. Now this one up here, okay, is the one that the Euro USD is trading at ahead of the ECB. Okay, so this could become potentially significant over the coming days. And what I'm specifically watching, if we go to the daily chart, okay, so this right back here was technically a failed breakout above that 2021 trend line. Okay, so you can see that following that, the euro continued to respect this level on the daily, right? Now we have another situation where we got Monday closing above this level. Okay, so Monday closed above. We had Tuesday holding above as well. And then of course, today on Wednesday, the market is once again holding above. Now, the critical level to watch here for the Euro USD is going to be 1.086. So as for support, this is the level that now needs to hold. We've talked about this area before, but you can see where the past 2 days, the market has found support right at that key level. So that's no coincidence. So this right here is going to be the area to watch as we head into Thursday's ECB. Now, let's talk through a few scenarios here for the Euro USD and talk about what we could get from Thursday's ECB rate decision and statement. And first of all, this is the rate decision and statement and also the press conference that I'm referring to here. So on Thursday, we have this right here, main financing rate. We also have the statement to go along with it. 30 minutes later, we have that press conference. So all of this right here is going to trigger significant volatility for the Euro USD. So first and foremost, I think that it's ill-advised to trade the euro, the pound, etc. ahead of the ECB, because even though it's not going to directly affect markets like the pound or even the Australian dollar, it is going to affect the DXY. So to that extent, considering the fact that the euro is the heaviest weighted currency within the DXY index, I think that trading any major currency pair just ahead of the ECB is ill-advised. All right, so that's first of all. Now, secondly, let's talk about a bearish scenario here because we have to weigh out every scenario. Even though the market right now is holding above this critical area following that breakout, we still have to consider the fact that this up here could become a failed breakout, very similar to what we got back here. Now, I'm not saying that it will be, okay, but as a trader, you have to consider all scenarios. So for a bearish scenario here to materialize, what would have to happen is the euro would have to close a day back below 1.086. It doesn't have to be today. It doesn't have to be tomorrow. It could happen sometime this week or even early next week. But if we were to see the market just consolidate up here and then eventually close back below 1.086, then that would give us a fake out very similar to what we got right back here. Okay, and this is a great example of how effective fake outs can be. Now keep in mind, this was a fake out above this trend line, and it was also a fake out above these two highs right back here. Okay, so this shows the power of these fake outs when they occur. Now again, I'm not saying that this will happen again. I'm not saying that at all. But we do have to weigh out a bearish scenario just in case. Now, the bullish scenario is, of course, the market holding above 1.086. So as long as it holds above this area on the daily time frame, that's what's key. Where these daily candles close is what's going to be critical here for the euro. So as long as it's holding above 1.086, you do not want to be shorting, in my opinion, because you would be shorting right into that key support. Okay, so as long as it's above this, though, this is, technically bullish, right? We have a confirmed breakout. We have the market holding above it for a couple of days here. So technically speaking, this is a bullish breakout. Okay, so we have to respect that fact. We have to respect what's on the chart right now, not what we think or want to happen in the future. Okay, so resistance for the EURUSD comes in at 1.0925. This little pivot right through here, that's more of a minor level. Of course, the more significant area is going to be these highs right back here up toward right around 110 or just below that mark. Okay, so this would be a target if the euro can hold above this area down here following Thursday's ECB. Now, the reason I really think that the EURUSD is the one to watch here with regard to really all the major currency pairs is because this level down here is so significant, okay, at 1.086, and it's also relatively close to the current price, okay, the current rate. So if we look at the DXY, the US dollar index, this is something that we've talked about at length recently where the market had been moving within this ascending channel all year. So higher highs and higher lows. And recently, we did get the breakdown below this channel support. Okay, so Monday broke below. We've now had Tuesday closing below, and it looks like today will again. So this right here is a confirmed breakdown from the DXY. Now, the reason that 1.086 is so significant for the euro is because, again, the euro is the heaviest weighted currency within the DXY index. So at over 50%, if we see this market close back below here, again, this is a big if, right? Because right now it is holding above support. But if this were to happen, then that right there would be most likely an early indication that the DXY could give us a bear trap down here, okay, a fake out, and reclaim levels like this up here, all right? And again, this is not saying this will happen, but it could happen, right? We don't know where these markets are going. So I do think that 1.086 is really the level to watch here for the EURUSD as we head into Thursday's ECB. And again, it's not just about the EURUSD, it's also about the DXY and how that's going to affect the major currency pairs. Okay, so for the DXY, like I've said recently, I think that trying to short the dollar right now, though, is kind of ill-advised because you've got all of these lows back here and you can see where the market is finding some support here. Even though it is looking relatively weak, you still got support to deal with just above 104. Now, if this were to fail, then that could give us the next leg up for the EURUSD. Okay, so if we were to get a daily close down here, then that would be bearish for the DXY down toward levels like 103.6, potentially down toward 103. And that, of course, would be bullish for the EURUSD. Now, one thing that we've talked about recently, too, is if this were to continue, okay, if this breakdown holds from the DXY, then we could get a move down here toward the bottom of this larger channel. Okay, so that's a scenario that we have to at least consider that if this market can't reclaim 104.5, okay, then we could be looking at a stair-step pattern down here toward levels like 102. Now, personally, I would love to see this market reclaim 104.5, and not because I'm a dollar bull, but just because I know that if we were to get the market reclaiming this up here, that would be a very high conviction play, okay? And it's not about what's likely right now, it's about what is high conviction. And for me, with the way that I trade, this would be very high conviction if we got the DXY reclaiming this area around 104.5. And look, don't rule it out. Don't rule it out because what we've seen here from the DXY over the past few months is this right here. So notice this down here at 101.9. This down here was a bear trap. Same thing over here. Okay, this level at 103. And if you go back and look at videos, we talked about all of this as it was occurring. This was a bull trap. I was getting bullish on the dollar through here at the start of 2024. Once again, getting bullish over here following that confirmed fake out. So we have seen this from the DXY before. So this right here, okay, could be another one of these scenarios. And again, this isn't about being a perma bull. This is just about weighing out the scenarios and also knowing that you can see how effective this is. Okay, if we were to get something like this where the market reclaims 104.5, then that of course could be dollar bullish. And alternatively, like I said, if we see this continue lower, break below areas like 104, okay, a sustained break below here, then we could just get that stair-step pattern down there toward levels like 103 and 102. Okay, so these are the key levels, guys, and the scenarios that I'm watching as we head into Thursday's ECB. But for the EURUSD, like I've mentioned, you can see it coming off a little bit here at today's high, but this area down here is the one to watch. If we were to get a daily close down here, that of course would be bearish for the euro. And if we get the market holding above 1.086 and reclaiming levels like 109.25, then that could be bullish toward levels like 110. Subscribe to the channel and click the bell for notifications. Don't forget to claim your 90% off lifetime access to the trading group and course. See the link in the description of this video, or if you're on the website, click on that link that says join VIP. Trade well out there, be careful with the upcoming volatility, and I will talk to you again tomorrow.